Good afternoon. As you may know, today the Central Bank Board held its session, during which the board decided to raise the refinancing rate by zero point 0.5 percentage point, setting it to 10.5%. So traditionally, a press conference is held, during which the governor will deliver the press release, followed by a Q&A. Thank you. On November 1, 2022, the board of the Central Bank of Armenia decided to raise the refinancing rate by 0.5 percentage points, setting it at 10.5%. In September 2022, the 12-month inflation rose, amounting to 9.9%. The 12-month core inflation also increased, resulting in 10.5%. Slowing trends of economic activity are observed in the global economy as well. The central banks of advanced countries continue to significantly tighten monetary conditions. This is expressed by a particular drop in prices in international commodity markets. Nevertheless, headline inflation in the main partner countries in Armenia is still high. Notwithstanding certain recovery in supply chains, risks related to their disruptions in individual markets remain. As a result, weak inflationary effects on the Armenian economy from the global economy are expected. In the Q3 of 2022, the trends of high activity in the Armenian economy persist. The economic growth primarily bears the positive effects of external demand, which is reflected in significant increase in the services sector. The continued increase in the inflow of international visitor and monetary transfers from the Russian Federation contribute to the expansion of demand. This is at the same time expressed in the improvement of Armenia's external balance position and the appreciation of the dram exchange rate. The high demand contributes also to the heating of the labor market, the expenses overall inflationary environment, and persistence of high inflationary expectations. In these circumstances, the conducting contractionary and coordinated fiscal and monetary policy is important. In the current situation, the board of the Central Bank of Armenia finds it appropriate to raise the policy rate, relatively tightening monetary policy, and will contribute to reducing inflationary expectation. The board of the central bank will be consistent in taking adequate actions to stabilize inflation and absorb any risk of de-anchoring inflationary expectation. Pursuant with the monetary policy scenario, the 12-month inflation will gradually decrease, stabilizing around the 4% target in the mid-term. The central bank board estimates that the risk of inflation deviating from the projected path are predominantly balanced. Should such risk materialize in either direction, the central bank will respond adequately and accordingly to fulfill the price stability objective. Thank you for your attention. I would simply like to remind you, based on previous experience, let's ask one question at a time. Then let others ask their questions, and then we'll get back to you. Thank you, Mr. Galstyan. Hraparag Daily Vahemakarian. I have more than one question planned, so if there will be a second round, yes, we'll answer every question. I'm interested at this point, since its contractionary purpose that is pursued by increasing the refinancing rate, how would you characterize containing the inflation if it's now 9.9? Had you not increased the refinancing rate, would the inflation be more than 9.9, and what it would have been had you not restricted it? How do you intend to restrict it further? And by how many percentage points this 9.9 will decrease? Mr. Galstyan, there was a hint here at the appreciation, that the appreciation of the dram exchange rate will also contain inflation. But there is an opinion that the central bank is more exercising leverage and emphasizing the appreciation of the dram to contain the inflation rather than through the refinancing rate. Thank you. Thank you for the question. With your permission, I'll start with the last part of your question about the exchange rate. I mentioned it in the press release, and we've talked about that many times. The exchange rate is a consequence of the processes in the economy. We have international visitors coming in, and as a result, we experience a great external demand, which is expressed both through the economic indicators, increasing trade and services, as well as a certain trend of appreciation of the forex. People who move to Armenia, do business or just visit, mainly spend in forex. They buy Armenian drams with their foreign currency to do their purchases. Since we have a free floating exchange rate, the central banks only intervenes in the forex market in those cases when we feel it's being distorted. Given this, since you know that through September there were certain decisions taken in Russia determined by the Russian-Ukrainian conflict, as a result, we observe the influx of foreign currency into Armenia increasing once again. We could not fail to respond to it because it has its impact on the forex market. As for the main drivers as a result of which we see persistently high levels of inflation and the way we fight it, we do it in several ways. One among them, and the first is, as you mentioned, the refinancing rate, and then the natural growth appreciation of the dram also helps to contain. If we hypothetically did not increase the financing rate and the exchange rate wouldn't have risen, it would have been at least the inflation, around in the neighborhood of 15%, whereas currently it's 9.9. We expect by the end of the year to have about 10% of inflation. Notwithstanding the mechanism to contain, yes, because your activities have a certain time lag in affecting the economy. If you remember, we were the first in the world to start increasing the refinancing rate. We increased it first in December 2020, and already in 21, the month of November, about 11 months later, we reaped its first positive benefits, as opposed to other countries where the inflation just started to raise its head. In Armenia, the inflation started to fall. Until the month of February, the Russia-Ukrainian conflict, we went from almost 10% down to 6%, and we're very close to our target. But Russian-Ukrainian conflict brought forth another cycle that we could not fail to respond to. Robert Azatutsun. As a result of all these, do you believe, when will the citizens finally see some drop in prices, at least for imported goods? We keep talking about that, but people do not feel any decline in prices. Thank you, Robert, for the question. For next year, our estimates are that in the global commodity markets, there will be certain decline in the prices. Of course, it would be very difficult to predict the processes that are outside of the economic domain. The day before yesterday, if I'm not mistaken, Russia made a statement saying that it withdraws from the grain supply agreement through the Black Sea. So predicting things like that would be extremely difficult because they do not fit within the economic logic. At the same time, if we look at the behavior, we see that commodity markets, we should expect in 2023 milder scenarios because the economic growth of various countries decreases. In the Eurozone, in China, in United States, we expect much lower economic growth. The IMF, in its projections that it has published, from 3.6, the global economic growth goes down to 2.7, if I'm not mistaken. 1% less of economic growth. China, which traditionally reported high economic growth, will have single-digit growth, close to 3% this year. The United States of America, they're debating whether as a result of their central bank policy, there will be a recession or not. All of these constrains demand, all of these factors, which may result and should result, if we remain in purely economic plane, will result in certain decline in commodity prices. Another question is how it will be transferred to the Armenian domestic prices, because on the one hand, the Armenian dram appreciates vis-à-vis the US, and it loses its value vis-à-vis which in itself loses its value against US dollars. So the economic agents have to adjust their prices towards reducing them. The only thing that may slow down or impede with this process is the extreme demand by international visitors. You may see that the economy is overheated. Their lineups in outlets, goods and services prices are increasing for services, which I can't recall when was the last time. So the supply will be a positive trend. The question is how long and how strong will the demand stay. Our actions are aiming at somehow constraining this overheating and the demand growth. ARCA agency, Mr. Galstyan, can you tell us the monetary transfers, especially for the visitors from Russia? What's the amount total? If you want numbers from Russia, we looked at today. There is about a 50% increase in the total of remittances. Specifically for Russia, I'll ask our colleagues to look it up, and we'll ask the next question until they come up with this number. Simon Sargsyan, mitk.am. The dollar exchange rate went down from 400 drams. You said you intervene when the market is distorted. The entire IT sector, all of the exporters are losing from this rate. So what's your projection for the near future? Simon Jan, the answer is traditional. We do not predict the exchange rate. We predict the inflation. Our commitment is to bring down inflation to the target by next year. As for the exchange rate and its consequences, naturally there will be companies that suffer, but not to make unsubstantiated statements. We have committed in the central bank a while ago to work with our partners in commercial banks, trying to develop the derivatives markets to some extent, being able to help the economic agents. According to this agreement, there will be some laxing of the normatives of the central bank, contributing to stimulating demand for derivatives in the commercial banks. At this point in time, almost all major commercial banks offer derivatives. We know what derivatives are about. Today, an economic agent can enshrine 3 months down the road, buying or selling Forex, doing the same 6 months down the road, doing the same 1 year down the road, and they get conditions that applied a year ago. We had a meeting with non-IT economic agents in the central bank. For IT partners, we're waiting for the colleagues from the cabinet, the respective ministries. We talked with developer exporters. Other entrepreneurs held a meeting here in the central bank. The commercial banks presented the logic of derivatives and how these should be taken advantage of. In general terms, we hope that these derivatives toolkits will, to some extent, help the businesses to manage their risks. But expecting that businesses will engage in their core activity without managing the forex risks while doing business would be wrong. So doing business assumes that you comprehensively manage all risks. maybe there was some misperception in the way I asked the question. When we refer to intervening by the central bank in deviations of the forex market, this market operates on a daily basis, but when there is large volumes of significant inflows over a short span of time, these in that short time may simply hold the market or result in issues. As for these activities, interventions in the market pertain only to that scenario without anything to do with the real sector issues that you referred to. There was another segment about your question which pertained to the threshold of 400 drams per US dollar. Various segments of the society, the businesses, create some psychological barriers like 480 down to 450, then 400, then 500, then 550, both upwards and downwards, which we turn into a psychological barrier and assume that there's no way they should be trespassed downwards or upwards. We do not hold any threshold in our minds. When I say distortion of the market, we're not talking about a fixed level, not in the list. Our discourse is about volumes, unilateral quotes, asymmetric interventions, restricting functions, operations by the banks. That's what I mean when we say distortions. Alina Oganisyan, Arminfo, with your permission, I'll ask the question in Russian. Mr. Galstyan, yesterday in the parliamentary hearings, they said that the budget has economic growth for 7%, whereas the central bank mentioned 4.5%. Usually there was no such discrepancy between the cabinet and the central bank, but this time there is a certain margin. Which factors affected your estimate being lower than that of the cabinet? For this year, if you paid attention, you may see that our government partners had lower economic growth expectations than we. For this year, our estimate was 12.9. If I'm not mistaken, it was double digit with the government, but did not exceed 11. It's cumulative. You add to the current level that level. This is one. We do not do our predictions about numbers, we do scenario predictions. Our estimates are based on certain logic of economic growth. When the government partners last year estimated 7% of economic growth, our initial estimate was 5.3, if I'm not mistaken. So both last year and this year, there was a certain discrepancy because we also have a risk management function. We look at the probability of all capital expenses following the logic that is enshrined in the budget. How probable is that? How probable is that if these capital expenses were to be expensed, the private sector capital expenses will also increase? So by way of conservative exercises, we think that this year's 10 or more percent of economic growth, we will have next year another 4.5% of economic growth, which is pretty good rate of economic growth. No mic is used. What has determined this rollback? If it was 12.9% predicted for this year, what are the trends next year contributing? This year it was 13% predicted, alongside which we mentioned several times that most of it will be determined by demand. Imagine the country has the potential to grow, which involves resources. In our assessment, there is an X potential for growth. We grew a significantly higher percentage over that X. This is a potential GDP is a non-observable. So in our observation, it's not possible to grow at much higher rates than your potential. The natural phenomenon is that after several years of growth, you return to your potential, which is non-inflationary. Our policies are to constrain this surplus part, not to have an inflation as much as we have it today. Not the inflation, the surplus demand is contributing to the inflation. Visitors, by visitors we mean the international visitors and the demand that comes with them. Thank you. In Q2 inflation report, the inflationary expectations had a certain dynamics. High inflationary expectations went down, low inflation expectations went up. Do you think this is anchoring expectations, the first step to anchor expectations, or would it be premature to conclude it? We hope that this de-anchoring will not continue. We're still in the stage of anchoring, but it would be premature to speak about inflationary expectations going down from the high level. If you follow attentively, you'll see in the last 2 quarters they were quite high. If I'm not mistaken, next time we will have our new positions to report to you, new surveys that we have done, and we will see what are the directions development in inflationary expectations. We have agreed on second chances, and you will have your chances. Mr. Galstyan, let me just, in responding to my first question, you mentioned that as a result of this policy, inflation will be contained around 10%. We'll have 10% end of this year. Our current actions are aiming at some time down the road in Q3 next year to get close to the target. 4% that is, yes. Before it became 10%, what was the refinancing rate? It was 4.25 that we started raising it from, but we did it more smoothly and persistently than most of our parents. The Federal Reserve and ECB are raising it by 0.75. America started with 0% over this week. If my predictions are right, we will already have 4% in the United States. So the last time you raised it in February 2020? No. Last time we raised it at our previous meeting, September. So let me clarify one thing. This increase of the percentage will affect mostly consumer loans. Will it also affect mortgage loans, and how? Because they claim it won't. Essentially, opinions differ. If you're following publications in the press, if that's what you refer to, there are points of view that it has already somewhat affected the interest rate. Some of the mortgage loans are floating interest rate. There is the primary main part of the interest, and then there is a floating component. As a result of the increase of the main component, the overall increases. Most banks take as their main percentage the central bank refinancing. There is a certain time lag. It has to go beyond a certain threshold of an increase, after which only the consumers will feel it. It's an issue not of policy, but of design of mechanisms. Apart from that, essentially, since we also factor in the developments in the real estate market, we have undertaken several other interventions, macro-prudential policy. For example, we have made LTV more stringent, loan-to-value ratio. The amount you have to pay in advance to get the mortgage. So we increased the risk that is assumed by the consumer and reduced the one on the financial system. We also had discussions about macroprudential buffers, systemic buffers. Of late, we decided to increase by 1 percentage point or 100 basis points. The banks will have to keep up to 1% of risk-weighted assets provisioning, which is good to constrain certain risks. Our overall policy, in terms of its overall logic, we want to be counter-cyclical. We try to conduct our policy in such a way as for in good times when everything is heating and is okay, to create an opportunity or impose upon the banking system to come up with certain buffers for when more turbulent times arise. We will be able to release those buffers so that they can loan to the economy, issue mortgages. So the main purpose of economic policy is just evening out these cycles, create provisioning in good times to get over bad times better. Let me clarify. Have you not looked at the risk that as a result of this policy, maybe many people will not think long term and have good expectations? At this point, for example, when consumer loan interest raises, respective strata of the population will face social issues, as well as some businesses who will not be able to take more favorable loans to go ahead with their business, and simple citizens will simply not be able to cater to their social needs, and they may claim that the banks are continuing to rob the people. There is such an opinion, especially in view of the consequences of Russo-Ukrainian war. The banks had about $600 million of super profits on the expense of this 3% of a commission fee. For example, in Turkey, Azerbaijan, and Georgia, there are no such commissions. So they're literally robbing the banks, both visitors as well as locals, when they cash a 3% commission fee. Not to get into the sea of populism, let's break this question down into several components that you tangentially touched upon. I wouldn't use the term super profit. It's very hard to define it. If the banks within the last, if you look at the return on the profitability of the banks, and the banking system has been operating extremely openly and transparently, they're paying all taxes that are possible in this country, and in difficult situations they help out both the economy and natural persons. During the war, a lot was forgiven to the families of the fallen servicemen. Many loan payments were deferred without encumbering the consumers or the borrowers. Their profitability within the last 10 years was about 9%. Is that the super profit or is it not? So I would refrain from lavishly using those terms. As for the commission fees, there are banks which apply this to foreign currency cash monies, and they collect up to 3% of a commission for that. This is determined by the geopolitical realities. The access to US dollars is quite restricted due to the situation. Quite naturally, people who expect that everything would be business as usual as before the conflict, I believe they should adjust their expectations to some extent. It's not every Armenian bank that could go out and take free cash dollars from a foreign bank, move it to Armenia, and give it out to its customers. There are significant added costs here, and some Armenian banks, determined by the American policy globally, have certain restrictions on cash. What you mentioned does not apply to non-cash. There are no commission fees on non-cash transactions. Only and exclusively for cash operations, there may be banks that charge up to 3% of a commission. As for the first part of your question, the social aspects, the banks have this year significant profits, which is the non-interest income. The non-interest income, the commissions, the transfer fees. On 90% of that is on the expense of non-residents. On the expense of generating these profits, the banks have raised their interest percentages far more mildly than the central bank raised its refinancing rate. So on the one hand, they blame the banks for not raising the mortgage interest too high. On the other hand, they blame them for business and consumer banks. The interest on business and consumer loans did not significantly increase in Armenia, which was determined by the existence of this non-interest income. I cannot speak for neighboring countries because neighboring countries may be different as their banks. The question is whether the private banking system of the neighboring countries has access to US cash dollars and whether they are as strict with the sanctions as is the Armenian financial system. So the question is not linear and one-sided. It has nuances. I believe at this point the Armenian financial system is managing its financial risks appropriately. It's of utmost importance for us, for our financial system, not to assume risks determined by its customers that may contain sanction-related hazards and risks. About the first question about social fallout, let me add one more thing. The mechanism that you referred to, that our interest rate increase will result in increased consumer lending interest and have a social fallout as a result. The governor mentioned in his first response that we have not observed such a great increase anyway. I would like to draw your attention to something else here as well. If you look at our inflation, which is 9.9%, within this inflation, the food basket prevails. Its increase is higher, which has the highest social impact on any country, including ours. Our goal number one is just for social considerations to constrain the inflation, which will have a much more positive impact on those social groups you mentioned. If high inflation has a longer impact and the inflationary expectations increase, no doubt the prosperity of the society will suffer. It's the low interest groups that will bear the impact first. So the increased interest rate is aimed exactly first and foremost at social goals, because the food basket had more inflation than other components. Another interesting phenomenon, as a rule, when we experienced high economic growth in the past, it was concordant with the great increase of the loan portfolio. Some of the growth was on the expense of lending. They were borrowing, ensuring economic activity. The growth this time is not accompanied by that, which is positive. The banks are quite conservative, that is, in lending out, because we all understand that in view of this uncertainty, there are certain risks that in the future may emerge. So even if now we have 13% economic growth, we do not have high leverage indicators. That is, the economic growth is mainly determined by the external demand rather than lending increase. Yesterday, when they were discussing the draft budget and reporting macroeconomic situation, the Minister of Finance mentioned that next year we expect global food prices decrease about 6%. Of course, from the high baseline. Will this has this been factored in your next year's inflationary assessment? Yes, since you missed my keynote, with your permission, I will reflect on that part of our press release. There is slowdown trends in the global economies. The central banks of developed countries continue to significantly tighten monetary conditions. This is expressed by a certain drop in prices in international commodity markets. That is, we also believe that next year's international commodity markets will be adjusted towards downwards. One more question. I would like to know whether the central bank plans, together with the government, to expand business support projects, especially producers of goods and services, because we see the slowing rates of loan lending, and the increased refinancing rate will result in higher prices for lending and stagnation. Do you have a plan to expand? We do not have and never had any business support projects with the government. Subsidizing the interest rates, that's the government's prerogative. They are the ones who decide it within the framework of their industrial policy. It's their turf of the government. One thing is obvious for us at this point in time, if I'm not mistaken, through this year's 120 billion dirhams worth of business loans were issued. When we were talking about the trends of appreciation of the dram, we're talking about those economic agents that will encounter certain difficulties because of that, since they have foreign currency revenues. But at the same time, they are businesses that through these years have bought Italian hardware much cheaper than had the euro been 600 drams. At 400 drams exchange rate, they save about 50% in their acquisitions, not to mention the government subsidies and whatnot. So this is a great opportunity for businesses which are trying to increase their productivity, enter new markets, produce new goods, to acquire equipment that will be used subsequently to offer services and produce goods. With your permission, I'd like to add something. We should also consider that this year we have quite an unprecedented economic growth as well. Almost along every sector of business, it contributed to quite a positive environment, which in turn is significantly lowering the demand for loans. The economy already has revenue streams, the private companies, that allow them to invest their own means. There are even cases when we see that there's progressive paying back their loans. So they use their own revenue streams for investments rather than relying on loans, on borrowing. About the exchange rate, down the road, if final consumption is increasing, do you also expect a certain decline in the inflation or the prices of mid-term consumption on the expense of commodity and equipment prices decrease? If you have analyzed this, could this transform also in the final products price increase mitigation, and also final consumption goods that are imported? For example, CNG and other such commodities. We expect, since our colleagues have mentioned many times that the significant component in the gas, electricity, and other water prices, there is a big component of forex. We expect that the tariffs will have to go down. As for the PPI, the wholesale goods prices, the same pattern applies there, because the main countries from where those commodities are imported and the global trends come to indicate that there will be a drop in demand and the prices will be adjusted. As to the percentage, it would be hard to say now. We've done our estimates, but at this point in time, we will refrain from publishing those numbers. If the interest persists, next time we'll reflect on that as well. Essentially, imported commodities that they meter at the border, let's say natural gas, the components that are factored in the price calculation are in dollars, and if the dollar exchange goes down, there have to be naturally certain adjustments. Mr. Galstyan, I would like to clarify first. Are there banks in Armenia that have joined in the anti-Russian sanctions? There are banks with Russian capital, right, in Armenia. I do not feel it on my own skin when it comes to sanctions on remittances, but some economic agents are unhappy. There are too many restrictions with respect to VTB Bank, less so for other banks. So the overall situation, are there banks that joined the sanctions? The press mentioned that the American ambassador has visited the central bank several times, and the American embassy is to some extent guiding, if not impacting or exerting influence over the central bank to contribute to anti-Russian sentiments in the banking system. Since this is your first time in our press conference, I'll answer this question, but as a rule, those types of questions we refrain from answering because they contain some yellow component. That was a publication in the press. Not everything in the press should be responded to in our... It's beyond our policy and our remit. As for the United States Embassy, Russian Embassy, French Embassy, Italian Embassy, and meetings with all those ambassadors, we maintain parity here. These are courtesy visits once a year or twice a year. I believe that I may have met more with the Russian ambassador than with the American ambassador, more times. As for their influence over our policy, it's zero influence. The central bank is an independent institution in this country which carries out its monetary policy to the benefit of the citizens of the Republic of Armenia. As for substance, there is one statement we made from early on. We will take sanctions very seriously. And the sanctions, it's not that they're anti-Russian or that the Russian sanctions are anti-American. We operate within the reality whereupon we follow the sanctions and refrain from, whether natural or legal persons, cooperating with those who are under sanctions. The banks, when estimating the risks, factor this in their bank policy. There is no guiding policy by the central bank for the commercial banks. The banks weigh their risks individually and take decisions about interacting with this or that partner or this or that dimension, whether they want to get involved or not. One more question and that would be the last one. It's interesting for me, considering the fact that the central bank is an independent entity. I do not want to use the word coordinated, but your monetary policy or fiscal policy that you conduct, do you have a mutual understanding or agreement with the Ministry of Economics? If I observed it properly, the Ministry of Economy and the CBA sometimes are at the opposing ends of the spectrum, and your policy is not always to the liking of the Ministry of Economy when it comes to exports and the dram exchange rate increases. The Ministry of Economy is not very happy that the dollar is devaluing because it could be a significant factor affecting economic growth. Do you consult with the Ministry of Economy, and is there an understanding with them? We, of course, hold consultations not only with the Ministry of Economy, but almost with every agency of the government, mostly with the participation of the Prime Minister. As for mutual understanding, there are points that we converge on, and there are points where we have divergent opinions, which is naturally we each have our own mandate, and essentially the Constitution and the mandate that the public gave us, keeping us independent, is aiming exactly at a system of checks and balances. We are responsible essentially for the standard of living of the people in this country, and we do this through a policy which is fiscal, monetary, and the government takes care of a short-term objectives that essentially in short term could be inflationary. So in order to iron out this conflict at a certain stage of their development, the societies came up with a structure which they named the central bank, granting it the toolkit and the independence necessary to be used to the benefit of long-term stable economic growth, which is very important if you want my opinion. There's this interesting phenomenon. The chairperson of the Federal Reserve System, a person called William McChesney Martin, has a statement which went down in history. He said central banks are called upon to remove the glass of wine before the party starts, and the people of course don't like it. So the government partners may not always like when we remove the glass from the party goers. Since you talked about exports and exchange rate, the exchange rate is a consequence and not a reason, which is why the central bank doesn't set the level of the exchange rate. It's the result of certain economic processes. In January and September, Armenian exports over the same period of last year grew by 64%. In September, over the September of last year, exports increased 2.5 times, which corroborates our statement that we have a significant impact of the external demand, and that's where the connection is. There was a question about remittances. The net transfers through the banking systems between January and September are 1.7 billion US approximately, which is a very high number. Over the same period of last year, it's an increase by 195%, which is completely ascribed to increase from the Russian demand. So it fits within the same logic and impacts the exchange rate formed in the Republic of Armenia. If there are no other questions, I apologize if I missed it. About the Fed, there are discussions that the first time running, the Fed will increase by 0.75% their policy rate. Do you expect a capital outflow from Armenia or withdrawal of non-resident major forex deposits? At this point in time, we do not observe such a phenomenon. I'm certain that you keep track and know that this will not be the last one that the Fed increases. In our calculation of the neutral exchange rate, this risk premium is factored in. Our decisions and other central bank decisions are ancillary, anchored to the Fed policy as well. If we remain independent to the Federal Reserve System increasing, let's say there is 10, ours would be 5. Whatever funds exist in Armenia may outflow to the American banking system because they have more attractive and risk-free jurisdiction. So our decisions, we try to prevent the outflow of capital. Not only us, almost all other our partners. At this point, the interest rate level that we have and the delta that exists between us and the US interest rate creates grounds to believe that there will be no such outflow. I would like to add an emphasis. Since last year, at various international platforms, the central bank mentioned that the increase of the Fed Reserve interest is good news for us. Why? Because in the commodity markets and as everywhere globally, there is instability, and it's all affected by the Fed Reserve policy. Today we have about 7% of inflation in the United States, which is very high, and it's in everybody's interest for America to address and resolve the issue of inflation. What did we see in 21-22? If they're stalling with it, they have to take bigger steps in the future, and capital outflow risks will be significantly higher because you have to take larger. So we think it's good news. That means from the global inflationary environment perspective, this will be a timely response. About the budget. Since this week they are discussing the draft budget. Yesterday you mentioned that the budget impact will be neutral. Could you spell this out? On the expense of what would that? Essentially, if you've been following our monetary programs, which I'm certain you do, if you look at the fiscal part of it, all the factors and the observations of the central bank, including there are certain assessments of the capital expenses and other components and their impact as well. Essentially, there may be certain discrepancies with the impact of the central bank evaluated signals and the government evaluated signals. The discrepancy is caused by varying perceptions of the economic growth, expenditure, tax policy assessments that may differ. The assessment for next year is neutral because both tax and customs administration policy as well as expenditure policy, current expenses policy of the government, there is certain consolidation that the government does here. In exchange, the capital expenses in the budget have a positive component in long term. As a result, the budget is neutral, but with the positive structural change when it comes to long-term expenditures. This is exactly what the budget program envisaged, and that was included in our scenarios that are built into our program. I wanted to ask Mr. Galstyan, this increase of the refinancing rate, will it affect the deposit rates? It will, but we do not feel it affecting it as much as we would like it to see it. The profits of the banks allow them to not feel the need to attract deposits at higher interest, to use it for a certain purpose. And we see that in the market of T-bills, government bonds, their interest increases. Within the last 2 weeks, the line of profitability of T-bills in the short term had a significant increase even before our today's decision. By the marketplace looking at behaviors and our response to the past developments, we're really expecting that we would raise it today. Do you have an expectation that the deposit rates will also increase? They are increasing. Some banks do it at various speeds and to varying degrees. They will increase over time. That's our estimates. There will be a shift there as well. About your observation with respect to the wages, in your previous meeting you mentioned that the wages market is hit especially in the services. That is, the increase in wages is not accompanied by productivity increase. Within this last month and a half, did your observations change? Is that heating persistent, or the wages subside and the unemployment increases, which is what you predicted midterm, if I remember it correctly? We haven't gone to the midterm. This right-hand chart shows that the nominal increase of wages in the private sector annually is more than 20%. For several months on end, we observe this phenomenon. We also see that unemployment is at historic low, but there are also many vacancies. So the labor market has certain issues. We're already hearing anecdotal stories about Armenian companies bringing in laborers from abroad to cater to their needs. There is quite high wages in construction, in trade, in services, which essentially pushes Armenian companies to fill in this gap by bringing in laborers from abroad. We'll see how it goes. At this point in time, at least in the labor market, this overheated situation persists. About transfers, what part of this growth of those remittances is Armenian citizens working in Russia, and what is the proportion of relocated Russian citizens? The prevailing part is on the expense of international visitors. Migrants do not contribute to such big increase. Most of the increase is determined by international visitors moving their capital or living expenses from other countries or Russia to Armenia. So these dynamics may not be sustainable. It's a one-time. We'll see how it goes. We keep saying it's short-term, but let's not face the proverbial situation when the most sustainable thing is what's temporary arrangement. An important observation about statistics. The numbers that I voiced pertain to remittances through the banking system. That number has two components. The part you mentioned, that is natural persons remittances that are non-commercial in nature, and then there are also commercial transfers. It's very difficult to draw a line between the two in view of the situation. Which part is determined by the increase in trade turnover, because we have significant increase in foreign trade, and it's obvious that a big chunk of it is determined by that. We think both have significantly increased. That is, remittances that are non-commercial in nature, but like the governor mentioned, the biggest part also is commercial transfers that have also increased. Unfortunately, in real time, it's difficult to make the distinction. A remittance arrives through the banking system. It would be hard to discern, is this to import equipment, and is it business or trade, or is it just like helping out relatives in need? So we consider both components increase significantly, but the commercial part increased more. If there are no other questions, Mr. Galstyan, I would like to get an idea of this 0.5 percentage point increase, the physical consequences thereof. This 0.5%, will the banks increase it proportionally in their subsequent consumer loans? And at this point in time, when the board took this decision, does that kick into action the very next day, or will there be a time lag? Yes, there is a time lag. As a rule, the first signal is the central bank repo rate increase by the central bank. Tomorrow or the next week, when the banks apply to the central bank for repo transactions, they bring in, collateralize their securities and receive cash. So there will be 0.5% more that we will charge. They use those funds to address their short-term liquidity issues rather than long-term lending, because for long-term lending it's more sustainable to use deposits. But naturally, like I said, we're in a very specific situation when the banks have significant profits, depending on how much they would need for lending. That will determine their deposit policy. What I mentioned pertained to the investments by banks in T-bills. They immediately respond, and they did it even before we increased our rates. They have already predicted that the central bank would most probably increase the rate, and within the last 2 weeks, when they took part in auctions to acquire government bonds, they did it at higher interest rate. About the transmission mechanism, the monetary policy is not just single track, and this transmission mechanism is just not one action. It's the whole course of activities and expectations. They have a combined effect on the behavior of the banks. All of the actions that we've observed since December 22 for already 2 years, that is increasing the refinancing rate for at a certain speed or in specific increments depending on our objectives, and the expectations and the communications by the central bank have to be viewed in combination in their effect of changing the bank's behavior. So this 0.5 today is just one contributor to this ocean of factors. Let me illustrate it by example, because the expectations matter. Let's say you're a commercial bank and will have to decide what interest to charge for a 5-year loan. It not only today's rate matters for you, but also what it would be over the span of those next 5 years. If you're expecting those rates to increase, you will charge more interest. If you expect that it would spike and then go down, you won't. In mortgages, it's even more important because mortgages span 15-20 years. That means you have to get a genuine understanding of what's coming to get your profits. So let me add to what Mr. Avetisian mentioned. What are the best indicators, reflecting those expectations? That's the line of profitability, of returns of T-bills. The expectations are higher. The central bank has sent this message many times. We will be persistent in addressing the inflation and will do everything necessary with the interest rate as long as necessary to bring back the inflation to the target. So filling in with Mr. Avetisian, this part of expectations is very important, since we clearly see that in the expectations, there is this component of increased rate. I think we have a few more questions. A little bit more about the banks. You mentioned that the non-interest income is dominant. Did you feel in their decision making a behavior, a perception that it will last and that they may be able to contract their spread of interest income to boost competition? Hard to predict. We're in times of uncertainty. Everything will develop by the logic of exogenous factors. It will be exogenous factors that will mostly determine the behavior of the banks. This is one thing that is important and we like and we feel comfortable with is that the banks are very conservative in their behavior, and even if they generate means on the expense of international visitors or some other stuff, these means are not steered towards the long-term lending, but keep it in liquid instruments so that they will be ready to service their liabilities normally if something happens. That's very good. And our decisions, macro-prudential policy-wise, are aiming exactly at keeping the system capitalized, replete with buffers, and liquid. As to what will happen in the future, we'll see. But the leitmotif of our policy is exactly what I just mentioned. Thank you. I think we've exhausted the questions. Thank you very much.